Thanks for joining us at XM.com. In this preview video, we're looking at inflation data out of the United Kingdom on Wednesday and the outlook for the pound. I'm Cristina Marujas. With me today is our senior investment analyst, Geralambos Pisuras. Geralambos, investors are pricing in aggressive rate cuts, even though Bank of England policymakers have been reiterating their higher for longer stance. Can this week's CPI data, though, change the market's rate cut expectations?
Hello, Christina. Indeed, the Bank of England appeared hawkish at its December meeting, with policymakers noting that policy will need to stay restrictive for sufficiently long to bring inflation back down to the 2% objective. What's more and very interesting is that although the consensus was for keeping interest rates untouched, 3 members voted to raise rates by another 25 basis points. Yet, investors are expecting around 125 basis points worth of rate cuts for this year, assigning a 90% probability for the first 25 basis points cut to be delivered in May. Perhaps they are concerned about the state of the UK economy, or perhaps they believe that that inflation will come down faster than the Bank of England itself projects. And this is after some institutions, including Deutsche Bank, said that inflation will fall below 2% by April. Now, at this point, we need to note that the Bank of England's latest projections in November suggested that inflation will return to the 2% target by the end of 2025. So this adds extra importance to Wednesday's CPI numbers for December. Expectations are for both the headline and core rates to have declined further, but taking into account that the services PMI for the month pointed to the fastest rise in prices charged since July, there may be upside risks surrounding the CPIs. And if the core CPI rate is to rebound, then the headline rate may rise by more, given that the 2022 downtrend in oil prices is dropped out of the year-over-year calculation, pushing the yearly change in oil prices from negative to close to zero. Now, the big question is whether a potential upside surprise will prompt investors to scale back their rate cut bets. I believe that if the reason they hold such a dovish view is because they believe inflation will come down faster than the Bank of England believes, then yes, a rebound in inflation may serve as a reality check and prompt them to remove some basis points worth of cuts.
I see. Now let's turn to the market reaction. How could the pound perform on the inflation data this week?
If the market is eventually convinced to remove a decent amount of basis points worth of cuts, then yes, the pound may benefit, especially against the dollar, as the Fed is seen cutting rates by 160 basis points this year, with a 70% probability for a first cut to come in March. Now, although the uptrend in cable has lost some momentum recently, I believe that the rebound and a clear close above the key resistance of 128 could signal a trend resumption and may encourage more advances. Now, in the case we get a downside surprise in the CPIs, this will corroborate investors' rate cut bets and may hurt the pound. A dip below the 126 support zone may carry more bearish implications in the short run for cable.
Geralambos, thanks so much. This was a preview video. UK inflation data is out on Wednesday. Thanks for watching at XM.com.